So, guys, we'll be talking about candle range theory, how the strategy works. Candle range theory means CRT and MSNR, Malaysian supports resistance, how they both work together. For example, like the MSNR is just this basic ABC pattern where price break structure, give you an inducement, comes back, comes to the QM, and then you see price buys. This is like the normal kind of MSNR that we usually see. But in order for you to get an accurate, let's say, an accurate detail on where and how to use it, all you just need to do here is for the CRT, for the CRT, what you need to do for the CRT, let's say this is a candle, for the CRT, what you just need to do is whenever you see that price taps into a particular key level and price closes above that key level with a body, let me draw this in, I'm coming. Where is this line to? Okay, here it is. Okay, let's say this is your normal week of a candle, and then the downside, and let's say this particular next candle opens and close above that week and leaves just 1 week like this and is already tapping into a key level. So let's say this is a key level. So let's say this particular point is a key level which price tapped into it and swept that previous low of this particular candle. It swept this previous low of this particular candle, making it tell us that okay, price has swept this previous low and it has closed above it. Now we are now expecting that as price has closed above it, we'll be expecting that our next action, if this happens on a daily time frame, we'll be going down to the like 1 hour time frame to look for our MSNR. That's normal sweep break enter through the QM. That is this particular um pattern that we'll be looking for, this particular pattern on like the 1 hour if this happened on the daily time frame. So we'll be looking for something like this. That price could just come back and then start buying. Are you guys following? So like this kind of pattern, this ABC pattern, that sweep and break, and then we expect price will come down and give us a resistance. So this particular stuff, once we are able to find that on the 1 hour, our target from the daily will be this high. This will be where we'll be targeting when we are looking for that particular CRT. Mind you, it needs to tap into a key level. Key level in the sense are like A shape, V shape. We have A shape key levels and we have V shape key levels. A shape, this is an A shape key level. We have V shape key levels also. This is a V shape. This is a V shape key level. So when price taps into this particular A-shaped key level, we will be expecting that price will give us a rejection. So if this particular formation of candlestick forms when it has tapped into a key level, mind you, when you're looking for this kind of A-shape or V-shape key level, you just change your chart to line chart. So when price taps into it, you look for your QM, you look for your CRT. Sorry, you look for your CRT. If your CRT forms on that daily or even on the weekly, then you now know that you will now go to a lower time frame, two time frames lower. From the daily, if it's on the daily that this CRT forms, you go 2 time frame lower, which is the 1 hour time frame, for you to now look for your normal MSNR sweep break, and then your QM is your entry. You understand? So now let me cancel all these things and then show you in the real chart how it works. Now, when what do you call it? When price does not show you this MSNR, you don't need to be forcing it. Once you cannot see your CRT or your daily count, your MSNR, you don't need to force the price. Once you can't see it, you don't need to force it. You just need to calm down and wait for it to form. So now, let's say like this. Now we can see a CRT being formed here. But for starters, let's say we follow from the weekly time frame to see where price is going. We see that price is actually bullish. Last 2 weeks price closed bullish. It closed above here, and then price was just around up here. But now we were expecting that for price to continue being bullish, we are expecting that price could come and fill these orders, this open close level. And in this open close level on the weekly time frame, if you go to the daily time frame, you see that that open close level is also a open close level again on the daily time frame, giving you a double confirmation that this particular key level is very valid. And you see that price came into that key level, tapped into it, formed our CRT. It formed our CRT. This sweep, you can see that sweep. A sweet sweep already. So like this sweep, and then it closed above it. Remember what I told you, in order for your candle range, your candle range to form, you need to see a sweep and a tap into a key level that will give you a more high probability trade setup. You understand? And you already know that the bias is already bullish. Now it tapped into here, closed above here on the daily time frame. Now what we are going to be expecting right now, we need to go to the lower time frame. Remember what I told you, 2 times 3 frames lower. Now we'll go to the 1 hour time frame. We are looking for what? We are looking for our sweep and break. You understand? We're looking for our sweep and break. Now here is our sweep and break. You can see that here price gave us this sweep and break here. Price tapped into here, went up, broke structure, swept this particular low, broke another structure. Now if you should change this thing to a line chart, for you to confirm your breaks, you need to use the line chart. Check your line chart. You can see that price swept here, broke this structure that brought that sweep, broke it, giving us a confirmation that now we are bullish, that we should start going up. Now we should start expecting buys. And now after price gave us this confirmation, the next thing that you need to look for your entry is your QM. You look for your QM or any other possible any other thing that is close to a liquidity. Most of the times you might not see your liquidity, but once you see your QM at that area, you are sure to just take that trade. So here is our QM. Now if I'm going to enter trade, I can just enter this trade like this. Mind you, for me, the way I trade my own, usually it might be different from the way others might trade theirs. So like normally we have different ways of trading this. You can see now on this particular zone, now you can see that price gave something like a liquidity and there's an imbalance FVG below here. Let me show you the FVG I'm talking about. Here's the FVG. See the FVG, this zone, there's an MVG that price needs to come back and reclaim. You can either place your trades from this zone, or you can also either place your trades clicking on that particular daily key level that price taps into. You know, that weekly and daily key level which made the key level valid. You can either enter from those zones. For me, I could just want to enter from these 1 hour zones, because most of the times price might just come like this, do like it as if it want to take you in, and they might not tap on that daily key level and then leaves you. So in order to be on the safe side, you can just follow from that your QM and then place your entry and then put it below the low, just to be on the safer side. Because most of the time some people might just be like, let's just risk a little bit, close this side. Price might just want to do his thing and just come tap here, hit your stop loss, and then start going in your favor. So it's better for you to cover all this space. So what we do, we just make sure our SL is below this low, this strong low. Then we target our high. The first TP will be here. This will be where your first TP will be. That will be your first TP. And this first TP for you, you can close it. It can be your final TP. For me, usually 1 to 3 is okay for me. But on this particular trade, I held my own to like 1 to 8 because I saw that there was also news on that day. So when price finally tapped me in, it's just like a simple and like ABCT setup. Once price tapped me in, it went straight for the TP, and I kept on holding because there was a news. So as price kept on pumping and pumping and pumping and pumping and pumping, I kept on gaining and gaining and gaining and gaining and gaining till 1 to 8. So 1 to 8, that was where I closed my trade for the day. You get? So like this particular CRT model, this MSNR and CRT combination makes your work like look perfectly smooth. You don't need too much stress. You don't need anything complicated. Just simple ABC patterns. Just simple. Once you're able to find your CRT formed on the day, you look if it's tapping into a key level, giving you a confirmation. Then you go down to the lower time frames. 2 time frames lower from that particular. If it's from the weekly, you go 2 time frames lower from the weekly. You see that the 2 time frames lower from the weekly is going to be the 4 hours. The 4 hours will be your entry point. So right now, because it was from the daily, 2 time frames lower was the 1 hour, and we were able to get this particular clean sweet setup, and then 1 to 8, and we are done. You understand? This is a very big profit making strategy. 100%. Although there's no strategy that is 100%, but at least out of 10 times, you can win 9. You understand? Thank you.